IRCTC stock has been a buzz in recent months, with the stock price going up 250% over the year-to-date period. Now, the company has a monopoly in the railway ticketing and catering services. It has taken over also running of certain train services from the Indian Railways, a valuable association with the Indian Railways for the company. The company also manufactures bottled water for the Indian Railways as well as for customers of the Indian Railways. It has moved into static catering as well, and obviously primarily runs its own portal for the ticketing services piece. Now, what has really moved the needle for the stock is the fact that it is able to leverage on this particular portal. So it has moved from only railway ticketing services to air ticketing, bus ticketing, tour packages, hotel bookings, as well as executive lounges. Now, the company has basically ventured into the end-to-end travel booking option and has also ventured into cruise liner services. It keeps adding verticals, and that is what has also helped the stock a bit. It has also ventured into e-catering as well as launched its own e-wallet. Now, the company's willingness to move into different sectors and markets of online travel have been one of the key reasons why the stock price has continuously gone up. It has also started competing with the Ease My Trip and Make My Trip as well, and has obviously a larger advantage given the large cash flow it gets from the railway ticketing services. Now, the company continues to maintain robust margins and believes that it will be able to compete with the EMT and MMT. It is a zero debt company, it's a profit making company, and has good positive cash flow as well, which is helping the company to grow. Sales for the company is expected to grow 50% over the FY20 to FY23 period, as well as profits are expected to double during the same period. The normalized margins for the company are a little bit north of 40%, which the company feels it should be able to maintain. Now, talking about other numbers, its cash in hand is roughly 1500 crores, and the cash flow from operations for FY21 was north of 300 crores. However, for FY20, that was significantly north of 650 crores, which we believe is the more reasonable number to consider. The company is obviously a PSU. It's 65% owned by the government of India. While the stock has doubled over the last 6 months, it has gone up 5x since the date of listing around 2 years back. So it's a clear multi-bagger, and a lot of brokerage houses have a buy rating on the stock with a target price of around 5,000. So good 25% upside as well, possibly for investors.